the directors have made the payments on behalf of the company from their own credit cards. So how we need to handle that situation end to end, from the accounting perspective, from income tax perspective, and from GST perspective. So I'll discuss insights on the same. And if you are a director, founder of a company, so it is very important for you to understand the end-to-end aspects of doing such transactions. So let's straight away jump into a real case which can happen in any one of us. Generally, what happens whenever you are making any payment in emergency, either due to no access of company's bank account or maybe the internet banking not working, so any of the reasons can be there. Suppose you are doing a transaction of 1 lakh rupees on behalf of the company from your own credit card. Now, what will happen is that either this payment once done, okay, this ultimately has to be reimbursed to you because you have made this payment on behalf of the company. But generally, directors either forget to report it or miss to handle such kind of payments. Now, the problem that generally happens in such cases that you will not be able to, first of all, claim the expense in the company's account for this. And secondly, if you are making any of such payment due to any urgency or emergency, make sure that you share the GST number with the vendor to whom you are making the payment. Okay, so GST number of the company, so that the GST billing is done in the name of the company and expense can be easily claimed in the name of the company in that case. Okay, so from GST point of view, you have to think in this way that if you want to claim this as an expense, you need to have a GST bill in name of your company. Second is, from income tax point of view also, if the bill is in name of your company, then only you will be able to claim this expense in the name of your company. Okay. Third point, from accounting point of view, this will be treated as a director loan. Okay, so these are three things. One, input tax credit you can avail under GST if you have got the GST bill raised. Expense you can claim under Income Tax Act if you have already got the bill in name of the company, as I mentioned earlier. And this amount should be treated as a director loan because director has made this payment on behalf of the company. Now, how it helps you? It helps you to properly report the net amount of profits of the company, because if you don't report this, your profits will be more than the actual amount of the profit. Suppose your profit are 50 lakh. This 1 lakh transaction is missed to be reported because you have made it through your credit card. Suppose the tax rate is 30%. In that case, 30% of 1 lakh comes around 30,000 rupees. So you will lose 30,000 rupees. Okay. Not only that, suppose you have paid 18% GST on this, so you will lose that 18,000 GST credit as well on. So on a transaction of 1 lakh that you have made through your credit card of 1,18,000 exactly, 48,000 you are losing. Okay. If you are not getting a GST bill raised for this transaction. So it is highly recommended to you as a director of a company that if you are making any payments on behalf of your company, make sure that you take a GST bill, get it reported properly. And I'm just talking about only one transaction. There are n number of transactions that generally happens through your credit card in case of emergency. So please make sure that all the accounting is done properly. Transaction, whenever you are doing it, take advisory from the professional and get your accounting sorted, because you will lose lakhs of rupees and you will not even be knowing about. Okay, so please ensure that these mistakes are avoided, and these can be avoided only if you have a proper system of accounting, taxation, compliance. Either you can do it in-house or you can take virtual CFO services from us or from any of the chartered accountant or company secretaries out there. Thank you so much from Team Legal Together.